This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with John Dalton, Managing Partner at Industrial Device Investments. IDI invests in manufacturers of industrial devices, sensors, machinery, and instruments. John, thank you for joining us.
Thank you, Hall. Appreciate the invite.
Great. So what was your background before investing in early stage companies? What did you do before this?
Yeah, so we probably fit more into your growth profile than early stage. I'm an industrial products guy, engineer by education, and spent 5 years at GE in their industrial plastics business in the early 90s, and then went back to school in North Carolina and stayed in North Carolina at Black & Decker in the manufacturing management team. And then went to some smaller companies, but always around industrial products. And, you know, we're kind of at the IDI is at the intersection of rust and technology. We usually don't like it if there's no rust, and we usually don't like it if there's no technology.
Well, great. Well, that's a good way to put it. So what excites you right now?
So, you know, there's a lot of good industry trends in investing in companies. And you always want to try to keep an eye on those trends and see what can be good. So, you know, IoT with Internet of Things and sensors, there's just so much going on. And certainly that's in the consumer world for sensors that all of us are using daily. But in the industrial world, it's a similar situation. They can save money and improve processes by doing a better job measuring things. And that's a big trend we're following.
Well, great. So you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups in your sector? What do you tell them to do before they write that check?
So, you know, I think for startups, the key is, do they have a very clearly defined purpose for themselves in the world? Because they're making a whole, right? There's something that they're filling a need, and that is either not filled now or they can fill differently. And to be able to create a wedge to really get some progress there for a startup, I think it's really clear definition of that vision and what that wedge is, so that they're going to be able to get to revenue in the near term.
Great. And then on the other side of that table, what do you tell people to do that are running startups before they go out for raising funding?
That's an interesting question. I really think what I look at the most when I'm investing is the team. And there's nothing that prohibits the startup, you know, from not having a clear idea of where that team is, what makes it great, and where it's going to go. You know, you could do that before you get revenue. And so the team, I think they can't brag on their customer references or how they've penetrated the market yet, because they're still at the startup stage, but they can brag on, you know, what the team has been able to do and why it's the strongest team for this particular venture.
Great. Well, let's talk about the state of startup investing or growth investing where you are. How do you see the industry evolving from here?
Geographically, we're in Knoxville, Tennessee, which certainly doesn't rival Silicon Valley for numbers of startups, but we see a fair share here. We've got Oak Ridge National Labs and the University of Tennessee, and we do see a fair amount coming from in different directions there. In fact, the company that I've owned now for 16 years was a startup out of University of Tennessee's electrical engineering department, and we do image processing equipment. So it's not been a startup for a long time, but I think the model of finding, you know, university and national lab and incubator type capability and direction and talent is well here and is alive and well here. Yeah.
Well, that's great. And what do you think the biggest change you'll see over, say, the next 5 years in startup investing?
I think over 5 years, I think you'll see continued growth of crowdfunding. That is, certainly sort of taken the startup world by storm, and that will continue. But venture capital and private investing, call it angel or friends and family, all of those pieces have a place. So the entrepreneur's got to be able to navigate, what kind of capital can make sense. And crowdfunding has a place, but I don't think it's in all the places. And understanding what the fit there is and what kind of capital makes the best sense for their effort, I think will be an evolving thing with crowdfunding's changes.
Oh, that's a good point. Well, let's talk about your investment thesis. What exactly do you look for in investing in startups for your fund?
Yeah, so we don't actually invest in startups that often. We're sometimes involved in the earlier stage. We're more involved after there's revenue. So I guess it depends on where you start to define startups. But we like industrial devices where a smaller company can be agile, can shoot with a rifle around where larger companies are in that market place. And because big companies, they really only shoot with a shotgun. So they miss these smaller niche opportunities where a specialist can really make a big difference for the customer. And, the smaller companies have a place where that innovation can take place. So that we try to find the innovation, but, we're really in that rust is in kind of old, boring areas, industrial places that, they're not going to be unicorns, but they can be great investments. And so we try to bring an appropriate mix of equity and a little bit of leverage and a knowledge of industrial marketplaces and the cycles that capital equipment companies go through, or even supplies manufacturers within the industrial space of sensors. It's usually electromechanical types of products that we're involved in, and we try to find places where that rifle can be as much of a sharpshooter as possible towards where that customer value is in the market.
You talk about a startup that fits that thesis?
Yeah, so I think being able to understand, I had a discussion with a startup that we probably is not a fit for us now, maybe in future years, but they have a new technology for turbines that improves the efficiency and the effectiveness of turbines in an industrial application. So, we talked through, why their technology was different and how it might fit. And one of our operating executives, Bob Carroll, came from the flow meter industry. So he had seen a lot of that type of equipment. And I think we were able to provide a little bit of value and made a friend, but probably not an investment for us right now, but maybe later as they gain some traction.
Well, for this sector, what do you find is the main challenge the startups face?
I think startups, the biggest challenge in all areas is that the world is so large and their resources can only be used for a fairly narrow slice. So they got to really decide what they're going to be great at and focus in on that greatness and not get distracted by all the other shiny objects that are out there in the world that can could be a great segment too. But a startup can only, the beauty of a startup is the focus. And when they can really focus in on what it brings amazing things for customers, then I think I've seen them be very successful.
Great. And on the other side, what is the main challenge the investor faces in this space?
So, this startups in my mind it's a little bit more of a crapshoot than investing in an existing company because you don't have any of the data and the markers from any existing success. So, there certainly is how to weigh the opportunity and the risk is a different exercise, I think, for startups than for even small existing companies, because at least you have some data with the smaller existing companies, and so there's a big difference there. But figuring out your metrics on how you're going to do that within a a startup, I think it's a difficult assessment.
Great. Well, you see a lot of different sectors and applications in this area. If you had to pick one or two that you think are really good opportunities for investors to pursue, what would you put at the top of the list?
So definitely sensors and IoT, and being able to get data on both the customer use of equipment and within a plant environment where you can get data now where 5 or 10 years ago you had no chance of being able to cost effectively measure that data. So I love looking at equipment companies that haven't done that, because I know there's an opportunity where if they instrument the equipment, then they can bring more value over a longer time period to customers for equipment that's in the field, and customers can in the end get the benefit of that value.
Well, great. Well, in the last minutes that we have here, what else should we cover that we haven't?
So we've talked about risk and markets and my analogy of rifles and shotguns, but I think the team is really the basis of any good investment analysis. You can change strategies, you can change people, or you could change strategies, you can change direction, but it's very hard to change people. And being able to clearly articulate who the team is and what they're trying to achieve and how they're going to get there is a challenge for that startup executive. And I would encourage them all to think of it as it's a team, being able to relate how the team can work together, not just the experience and capabilities, but how that team can come together to be successful in the venture that they're doing, so that investors can understand that larger team picture.
Well, that's great. Well, how best for listeners to get back in touch with you?
Yeah, best way is email. That's john@idinvest.net, and I think you've got it in the show notes there. So if folks want to talk, we have to set up a call and talk about where there might be crossover and their efforts and ours.
That's great. We'll include that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks all. Have a great day.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.